is bullish. Mr. David, are you in the class? I think it's the same pattern. Let's start with the daily. So you can see yesterday candle closed as an hammer. I told you guys during the weekly markets outlook session that we have a fair value gap here that needs to be filled for GU to go bullish. You can see. So price pulled back into this fair value gap. This gap got filled, and you can see what they did here was to clear liquidity at this previous low, equal low, and also this previous low. That was what they did. Cleared liquidity, filled this fair value gap, and the candle closed as a bullish reversal pattern. This is an hammer.
Yes, sir.
Right? This is an hammer. Now, after the formation of the hammer,
you wait.
If you just focus on the daily time frame, okay, if you just focus on daily time frame, you wait for today's candle to close bullish before you buy. So for those who are trading with the daily time frame, this is now they will be considering buying at this point. This is where they will be considering buying, those on the daily time frame, using daily time frame for analysis. After the formation of this hammer, bearish hammer, you need to wait for a bullish candle to close. So this is where the daily time frame traders will be executing their buy trade. But we would have entered earlier today because after the close of yesterday candle, if you go down to 4 hour, I'm sure we had a bullish reversal pattern on 4 hour time frame. Let's just confirm. Okay, so you can see the pattern we had on 4 hour. Now, this is not a valid bullish reversal pattern, right?
Yes, sir.
What should we call this? Should we call this a bullish marubuzu? It looks like a bullish marubuzu, right? But it's not a valid bullish reversal pattern. So for us to confirm that the buyers are in control, we have a lot of demand. We should wait for price to close above the high of this bearish candle that formed before this bullish candle. This is a confirmation that we have more buyers. Okay, there is more demand than supply. So it is after the close of this candle, we will consider buying. But if we had wanted to execute after the formation of this candle, we need to go down to 1 hour and let's see the pattern on 1 hour. If it's a bullish reversal pattern, then we can consider buying. Let's go to 1 hour, yeah. So you can see the pattern we had on 1 hour here. Can you see it?
Yes,
this is a bullish reversal pattern. We had a spinning bottom, or you call it a doji. And before this doji, we had an inverted hammer. So all we were waiting for was a bullish candle to form for us to buy. And this candle that formed, this is an engulfing candle, engulfed this candle, and also engulfed this candle. So we had a bullish reversal pattern at this point. Okay, so after that, we identify our fair value gap on 1 hour. Okay, this is one fair value gap. This is another one. So you can see why price didn't come back to test this fair value gap. And look at the time. You can see this happened during London session. So before the formation of this pattern, what they did was to clear the low of Asian session. Can you see it? This is the low of Asian session. So what they did was to clear liquidity, which is the low of the Asian session, before going bullish. So from the close of the daily candle, we already know the direction for today's market, which is bullish. So all we need to wait for is for price. You can see price range during the Asian session. Can you see that? It's ranged. And during the London session, they had to sweep the low of the Asian session before going bullish. So you can see that's the reason price didn't get to this second fair value gap. So if you had executed a buy after the formation of this armor, or you call it spinning bottom, after the formation of this candlestick pattern, you could have waited for this next candle to close, okay? Now your stop loss, if you had executed buy after the formation of this pattern, because after the formation of this pattern, you wouldn't just jump in. If you're just focused on 1 hour time frame, you're supposed to wait for this next candle to close bullish before you execute buy. But if you don't want to wait for this next candle to close, you can go down to lower time frame. Let's say the pattern we have on the next lower time frame. If it's a bullish reversal pattern, we can execute a buy without waiting for this candle on 1 hour to close before executing the trade. So let's go to 15 minutes.
30 minutes. You were 1 hour before.
No. You don't go to 30 minutes, please.
Okay.
You can't switch from 1 hour to 30 minutes. Okay. So you can see the pattern we had here on 15 minutes.
15
this
minutes.
is a bullish reversal pattern. When selecting time frame, use the rule of 4. Okay. Use the rule of 4. For example, if you are working with 1 hour, or let me use 4 hour. 4 hour, 1 hour, 15 minutes. Because 4 candles on 1 hour time frame makes up a candle on 4 hour time frame. Then from 1 hour to 15 minutes, 4 candles on 15 minutes makes up a candle on 1 hour time frame. Do you get it? If you're working with daily, the next lower time frame will be 4 hour, then 1 hour. Daily, you have on 4 hour, you have how many candles to make up a day?
8.
That's 6 candles.
Okay.
Right? 6 candles. Right?
Yes, sir.
Then 1 hour, you have 1 hour, 4 hour. That's like 4 1 hour candles makes up 4 hour, 1 4 hour candle, right?
Yes, sir.
So that's the way you operate. You don't move from 1 hour to 30 minutes. It's not a good way when you're selecting time frames. Okay, you get it?
Yes.
So if you look at 1 hour, 15 minutes, and 5 minutes, 15, 5. That's 15 minutes and 1 hour. That's 4 candles on 15 minutes, right?
Yes, sir.
Makes up 1 candle on 1 hour time frame.
No.
And 6 candles on 3 candles on 5 minutes time frame makes up 1 candle on 15 minutes time frame. Do you get it?
Yeah. Yes, sir.
So the difference should not be much.
Okay, sir.
You get what I'm saying?
Yes, sir.
Okay, so when we came down here, we saw a bullish reversal pattern. So there's no need waiting for the 1 hour. But if you still wait for the 1 hour to form, no problem. Now, after the formation of that 1 hour, after the formation of this 1 hour candle, which is an engulfing candle, break out from this resistance, it created a fair value gap. So after the formation of this engulfing pattern, you go down to 15 minutes, identify the fair value gap, wait for price to pull back to fill that fair value gap. If you don't want to wait, you can go on, execute the trade, but you should know your stop loss should be below the fair value gap. So the fair value gap was created here, right?
Yes, sir.
This is the fair value gap. Price came back, filled that gap before going bullish. So if you are not entered after the formation of that 15 minutes candlestick pattern, here is another opportunity for you to buy, but you ensure that your stop loss is below the, should I say, the lowest fair value gap. Yes. Okay. The lower time frame fair value gap. You ensure that your stop loss is below that level. And as the market keeps going in your direction, you can now be adjusting to the next fair value gap. Do you get it? So for example, if you had entered buy, if your stop loss was below this fair value gap, immediately price moved up, okay? Moved up at this point and created a new fair value gap here. created a new fair value gap here. You can move your stop loss from this low to this next fair value gap. It went up, created a new fair value gap here. There was another fair value gap here. Yeah, this is a new fair value gap that it created. Then you can adjust your stop loss from this level probably to this next fair value gap. Do you get it?
Yes, sir.
Mr. David, I hope you're with us.
He's on the chat. I think he's with us.
I've not read this message. I guess it's busy.
I'm with you.